Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in SPY IWM QQQ daily weekly. So we set our lower high. It actually happened yesterday, and the action that we've been seeing really pre-market is dictating how we open. That is completely opposite, where we close at the low of the day, then we close at the high of the day, and then we close down weak. So we're really going back and forth, but I think a really good time frame to be utilizing with this action is the hourly time frame. And that kept us in perspective, where after the 2-day dump, if you look at the hourly chart over the last 3 to 5 days, after that 2-day dump, we could see that the bounce, while it looks really strong on the daily, we had a big green day across the board with all these sectors yesterday. You could see on the hourly time frame it was fairly significantly lower than looking at where we had come from on the 2 days previously, and more so with the tech sector than the S&P 500, because again, the financial sector, we are seeing sector rotation of money from tech into financials, but the financial sector cannot hold it up alone with tech seeing so much weakness, which is why we're seeing this pullback, and it's fairly significant with a ton of volume behind it. So we can see here the lower high pattern did not break, but we did break the lower low pattern. Sure, the bulls did buy the dip. They defended the 50-day moving average. They're at the lower Bollinger Band, but we are obviously losing ground here and breaking higher lows. So with the volume backing this move, we will be looking for some lower highs and potentially lower lows to form, but this middle Bollinger Band, or I should say this lower Bollinger Band, needs to expand to the downside more rapidly to create room. I can't remember the last time we were below. I guess we did close below the lower Bollinger Band once back here in April, but not often has the S&P 500 nor SPY closed below that daily lower Bollinger Band anytime in the recent past. So the weekly time frame, again, this candlestick is all over the place with how it has changed over the past 3 days. But with one trading day left to go, we can pretty much say that it's going to be a battle for these exponential moving averages. We are seeing this bearish MACD cross begin to follow through, and we are currently confirming the bearish reversal doji. So still very, very strong. There's no changing that until we would have to really lose the middle Bollinger Band as step number 1 to have a significant change on this weekly time frame. But it is just so strong for the bulls that they have, again, so much wiggle room where we could pull back. So looking at the monthly time frame, because the tech sector monthly stood out to me. And we do have a clear bearish reversal candlestick on the monthly chart after a significant move to the upside. The monthly chart's very overbought. So we'll see. I mean, I'm not ready to go completely bearish on the market. I did go bearish on the tech sector a few days ago for Q3, and that certainly did play out, at least so far. Obviously, there's a long way to go. I'm certainly not counting my chickens there, or counting my eggs, or one of those things. Count them both. IWM. So we see a little higher open, but then the bears took over significantly. That being said, it's not nearly as weak as SPY. So we do have our all-time high. We consolidate, form a higher low, and we did make it most of the way back, but now we're hitting a wall of resistance. We could put a horizontal resistance line right there at about 142, it looks like, and that would have rejected the price a total of 6 times in the past 4 weeks. So 142 is a bit of a psychological resistance level to be keeping an eye on. And we do still have higher lows. The bulls did buy the dip. We're holding the middle Bollinger Band on the daily. So all in all, the IWM bulls are definitely still holding control. A little bit of an indecision doji, and we do have to be cautious of that almost double top, 142.90, 142.35. So it is a lower high, and it would be a red flag on the weekly if we were to break 139.01 here to see that little lower high and lower low, but that's a long way to go. So QQQ, very clearly the drag here, and all that weight in the tech sector leading to the downside. And again, we broke the bearish reversal head and shoulders pattern now, and that has been lost. So we have our lower high and lower low. The volume is convincing. Look at the bear volume compared to the bull volume in the past 3 days. And again, check out that hourly time frame, and it's very clear that it was an oversold bounce, and we needed a lot more proof for those bulls to really recover from the 2 days how we started this week, and they certainly obviously didn't do that today. So lower high, lower low. Look at that bear volume stand out, bear MACD cross, and we're going to be looking down at 135.50, and the middle Bollinger Band on the daily is going to be just below that level next week, 135.50. So that's the next weekly support to be looking at. There's a gap all the way down here at 132.52, keeping an eye on that level as well if we were to lose that middle Bollinger Band. But again, these longer term time frames have so much wiggle room. Middle Bollinger Band is just red flag number 1. losing that would be. So that's what we got. We'll see you over the weekend. Have a good night.